Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 19th of March, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the Reserve Bank left the official cash rate on hold at 4.35% this afternoon, with Governor Michelle Bullock saying neither rate rises nor falls were being ruled out. Some economists interpreted the commentary as the central bank dropping its bias towards higher rates. The share market had been trading flat until the announcement, and by the close, the S&P ASX 200 was up nearly 0.5% to 7,703 points. Best performers were the material sectors, including the big miners and the energy stocks, thanks to higher oil prices. BHP, Fortescue Metals and Rio Tinto were among the best, as were Santos, Woodside and Goodman Group. James Hardie and REA also outperformed. The banks tended to underperform, as did Wesfarmers, Telstra, Woolies, Coles and Xero. In corporate news, dental clinic operator Pacific Smiles received a revised bid from Genesis Capital to acquire all of its shares at $1.75. That's 25% higher than the original offer last December. Pacific Smiles operates 128 dental clinics in New South Wales, Victoria, Queensland and the ACT. It employs about 800 dentists and 1,600 support staff. It closed today at $1.66 a share. And New Hope's share price jumped 5%, notwithstanding it reported a near 50% drop in revenue and a net profit 62% lower for the 6 months to the end of January. It also cut its dividend. Story number 2, Wall Street finished higher this morning, boosted by tech stocks. Tesla hasn't had a good time of it recently, but this morning it closed 6% higher. It's still off about 30% this year. Alphabet also rose, up about 4%, meaning it's up slightly for the year. They're both some way behind the best performing tech stocks in the US. Nvidia, for example, it's up 80% this year. Meta's up 43%. In Japan, the central bank raised interest rates for the first time since 2007. While dropping unorthodox measures which it had used to stimulate the economy for more than a decade. The Bank of Japan shifted the benchmark rate from minus 0.1% to a target range of 0 to plus 0.1%. Okay, not much, but at least they're positive. Story number 3, independent directors at Boral have recommended shareholders reject a buyout proposal from the Stokes family's Seven Group, arguing it undervalues the company. Seven has offered $6.05 a share, and the independents, who do not represent the interests of major shareholder Seven, quoted an independent expert's valuation of between $6.50 and $7.13. Now, Seven Group holds 72% of the company, and there are about 42,000 minority shareholders in Boral. The Stokes family took control in 2021 and has pushed the company back towards a focus on Australia, away from North America. In fact, it's sold about $4 billion worth of assets in the US in recent years. Seven already owns Coates Hire Business, Westtrack Mining, Trucks and Machinery, and 30% of oil and gas group Beach Energy. Story number 4, the owners of Kathmandu and Ripcool will refocus their strategy on the local business and postpone plans to push into overseas markets after a disappointing half year for the retailer. KMD Brands said first half sales were down nearly 15%, with December and January tougher than anticipated. Warm weather and weak consumer spending were blamed for the drop, and pre-tax profit tumbled 67%. In fact, the bottom line was actually a loss. Kathmandu has a bias towards warmer clothing, so the upcoming winter period is very important for the retailer. The group hopes to improve its online sales in particular. At the moment, they represent about 11% of direct-to-consumer sales. It all means that the push into overseas markets has gone to a longer-term goal. And finally, story number 5, Aussie Broadband is taking court action to try and stop rival internet provider Superloop from forcing Aussie to lower its near 20% stake. Aussie Broadband bought 19.9% of Superloop in late February before making a $466 million bid that was rejected by Superloop's board. Then earlier this week, Aussie said it had received a notice from Superloop instructing it to sell 37.6 million shares within 10 business days to lower its stake below 12%. Because it hadn't received approval from Singapore's Infocom Media Development Authority for the February stock purchase. In response, Aussie Broadband has filed an urgent request in the federal court for permanent and interlocutory injunctions to set aside Superloop's notice. It's all getting a little legal and a little ugly, that one. That's it for the afternoon report for Tuesday, the 19th of March, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X, TikTok, and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed. The top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.